very confident that this video could be the most important one you will watch in your entire trading career. Before you step into financial markets, it is necessary for you to understand why markets move and why trading actually works. Nowadays, we often just try to replicate strategies to get rich quick on YouTube, like inverse value gaps or other ICT concepts, without actually understanding what drives price. And if you do not learn this in the beginning of your journey, the chance of you believing in stupid made up theories is way higher, and you will probably strategy hop your entire life just because you can't look through and actually see what's making sense. So, I will go through all of this, starting with what's driving price. We will talk about market mechanics and how they are displayed by the chart, and even playbooks on how to approach the market based on logic. So you can just skip to the next slide if you feel like you already know about the current one. And the goal of this video is not to switch from your strategy to the next one again. It is for you to get deeper knowledge in what you are doing. It is okay if you are trading IFVGs, for example. There are reasons for them to work, but only under certain conditions, and you will get what I mean in this video. So prices in financial markets work exactly the same as on eBay or on the housing market. It is just supply and demand, and I'm not talking about the technical strategy. There's just supply that wants to sell, and there's demand that wants to buy. And when the scale tips because supply or demand is stronger than the other, price has to move. So price moves up if demand is stronger, and price moves down if supply is stronger. There are two different orders in an order book, aggressive and passive orders. Passive orders are waiting for price to come to them. For example, when a farmer wants to sell an apple for $5, and now an aggressive participant needs to come and take this offer, and before an aggressive participant comes, market can't actually move to that $5. So we always need at least one aggressive buyer or seller for price to actually move. And this is how this is displayed in the depth of market. The best ask describes the lowest price people offer to sell, and the best bid describes the highest price people are ready to buy. When aggressive buyers hit the ask, price will move there, and if aggressive buyers hit the bid, price will move there as well. The spread just describes the difference between the best ask and the best bid. Why is that so important? Because no matter what affects the market, it will always be reflected in the order book. It always needs to be executed for price to move. No matter if there are news that are driving price, if there are earnings or geopolitical factors, it doesn't matter. Everything that moves price needs to have some form of executions you can spot in level 2 data. Now we are slowly getting into reading charts with the idea of balanced prices, which come from auction market theory. Auction market theory is just a theory to understand markets through supply and demand. And markets tend to stay at certain price levels, and buyers and sellers agree that the price is fair. And when that happens, the market is considered balanced. I visualize this either using a market profile or a volume profile, depending on if you're choosing to display by how much time the market spent at each price or how much volume was traded at each price. The value area shows where 70% of that took place, so where prices are fair. And the absolute max shows the POC, which is considered the fair value, the fair price. There is a rule of thumb for market profilers saying a market spend around 80% of the time in value, so rotating through the value area, and only around 20% of the time discovering prices outside. But how do we actually trade this? These are the two playbooks you could use. Of course, it's not just as simple as displayed here. You can't just sell at the value area high and buy at the current value area low. But this is the logic behind this whole trading concept. If price doesn't accept prices outside of value, it's obvious that price wants to return to the area where orders can get filled the easiest, and there is a very high chance price will run through the entire value area again, not just return to fair value. Participants can also accept prices outside, which then obviously leads to a trend with fast price action because the asset needs to search for new value again. So big players can get their orders filled. If someone still doesn't really get why trading works, here's a quick example using the coffee futures. As far as I know, the last world trading champion, I forgot his name, even used that exact setup in the competition. Yeah, so the expectation when coffee futures break out to the upside is the producers may sell into rally because obviously they want to sell at higher prices. If we look at a commercial short chart, for example, and there we can see them selling, this can imply two things. With number one being producers know the harvest wasn't the best, so they know prices are very likely to continue rising. Or number two, the harvest was so bad they can't even sell, reducing the supply incredibly, leading to massive increases in price. So that's just an example of how to interpret supply and demand with the data we can see and build setups for trading. This one is more longer term. I also use it for day trading. And here are the simplified concepts I apply for day trading, describing the market cycles I need to identify. And I also have a logic overview right here. And the PDF is posted in my free Discord server. The link is in the description. And now we will go over what you need to remember so you never can fall into traps of stupid made up theories with magical fib levels or whatever. So important to remember is that large orders must find liquidity. A auction needs to take place for price to move, and that the footsteps of supply and demand create predictable patterns. And if you have any comments or questions you'd like to be answered, just write them into the comments.